welcome everyone. Welcome to the what is it today? Man, I just lost count of dates. It is Wednesday class. So today we're gonna be taking a look at the second part of oh man, I can't believe that I'm just so lost today right now. But all right, so as we can see right here, we're gonna be taking a look at the second part of the risk management and confluence zones. So other than that, let me get started with you guys because you guys are awesome and you guys deserve a shout out every day of the week. Let's get started with Crypto Chef. First one in the chat. Welcome, Crypto Chef. Long time no see. Great to have you around. Really love your presence here. Hopefully you can assist a little bit more. Don't make the class that much fun, brother. Alexander G, welcome. The queen mode of the whole internet. I'm sure you are just that good, man. You are everywhere. I love your moderation. Also, I love that you make that the chat so great. Username my party body. What is up, brother? Let's go let's ride some what was it, some Dutch pickup trucks at the end of here. So maybe we can do that up in the future. Harp, orange juice and coffee. Man, have you tried it? I don't know. Let me know if you have tried it. Did you liked it? Do you hated it? Let me know. Harp in the chat. Welcome, my friend. Welcome to the Wix wife. How is it going? Welcome to the class. Great to have you here. Awesome, sending you amazing vibes over there wherever you are. Harp also fine 89. What's up? What do we have? Who else we have in here? Donato Cabrera. Hey, what's up? Welcome, my friend. There we go. So today might be a little bit of a short class. We're just going to be taking a look at how to do some risk management. A couple of other options are out there. And of course, make sure that you also do your own research and adequate whatever works the best for you, right? Remember that at some point, everything will feel like not as a precise science, right? Which is not. At the end of it all, we are charting people buying and selling, right? And depending on how emotional the traders are, well, we'll see a different reaction on the markets. Therefore, at the end of it all, we are charting people's emotions, right? And that is not a mathematical equation. So far, until now, I don't think there is any mathematical equation that can chart that. But seems like we're trying to do it right here on trading. So everything might be feeling subjective for you at some point. So just be patient, do what makes sense for you, right? And start building up on your own strategy. At the end of it all, we all had different experience. Our brain is evolved slightly differently, and we perceive reality slightly differently. So do what makes you money. All right, let's get started. And let's see. Hey, Donato Carrera, how are you doing? Hello, says Alexander G. Let's take a look at a little bit of that couple of other options that we have. Let's jump into my charts. All right, right here. First of all, hey man, TIA just going to resistance, and what a pump from Bitcoin. Very nice right there. W pattern here, taking previous highs. Then guess what is up next? All right, so basically if we have breaking a previous high, it's not about your breakout. Hopefully we can do it's about your retest, right? This is, guys, when I start jumping in with half of my position. Let's remember, right, at this point I'm looking for maybe I need to join in here. Give you guys 1 second. There we go. I need to log in, sorry for that. And this is it. All right, so this is one of the things that I was talking about earlier. Remember where we are talking about the accumulation scheme from Wyckoff, right? This itty bitty part right here, when we break back inside the pattern and then go back slightly, this is what I jump in with half of a position for a long. All right, why? Because I'm not certain that we're gonna keep going upwards, right? But still, I want to put in a little bit of my money there, right? In case we go upwards, use some risk management, and I'll show you how I do that in a second. So far, I believe that if we take a look at the major movement here, remember this is range, this is the V-shaped recovery, the high, not higher than the previous range. We have the 70% chances of ranging, or even if you're looking at closest one, coming down, little range, V-shaped recovery, higher, not higher than previous range. We have a slightly upper range, right? And that is because most of the action it's above our zero line. And then what happens? Well, then we have the spring, a double bottom spring. We talked about this before, right? So right now we're having that last push, right? That is trying to get back inside the pattern. Let's remember when we talked about ranging or range trading, all right? Let's do a little bit of that review. When we have a pattern, not only a range, any kind of patterns, all right? Let's go for a ranging here first, right? And we have whatever happening here, and then we have a fake out, all right? And then we're looking for a rejection, all right? At that point, we're looking to our oscillator to be above, all right? Coming back down, flip of the ribbon at the zero line right here, and go on with the movement, and off we go, all right? But if the other way around happens, like for example, let's go into it like this. I'm going the other way around so you guys kind of like start from unfamiliarized ways here, right? And then breaks back in, right? In our oscillator here, it's up in here and then going through, right? We already have seen going through. Most likely, we're going to be hitting the other side of the pattern, all right? When we talked about this, we also give some examples with triangles, right? Let's do one quick triangle just to have a little bit of an overview here, right? Let's go for a symmetrical triangle and then do whatever the price will this one be, right? Something like that. And then we have maybe fake out, closing back in, hitting the other part, right? At the end. Or if it's an early breakout or fake out, right? You can see it's something like this. Breaking back in, and then we hit the other part of the triangle, all right? So the opposite side. So what's happening here? We are breaking back inside, guess what? A megaphone pattern, right? I mean, of course, this could also be a fake out. That's fine. But remember, the market is perfectly unperfect, right? So we need to be able to adapt to whatever is happening and be quick to change our decisions fast enough with the market. The only way to do that is not to react, quote unquote, right? But to have a plan before it happens, right? And of course, have plan A, plan B, or plan C. Let's do a quick recap also on one of the links that we shared before. It was from, let me just get it back in here. It was from Google Drive, and it was the sheet called Get Prime Step by Step, right? So let's go for that one. Get Prime Step by Step. I got it right here for you. Let me push it over here. Perfect. I think we are visualizing it now. Perfect, right? And remember, have always a plan B. Where do we locate that? It is, I believe, in here. When to enter or before entering a trade. There we go. Have a plan A and a plan B. Remember, there could be manipulation or the market just go crazy on you, right? Remember, we have shared this link of the Piper Academy. Just go under members and look for the chapter 6. So look for the chapter 6 and you'll have right there the notes of the class. This one should be, let me just correct that, chapter 6.1. All right, I just corrected the name of this stream. Nonetheless, I'm going to be republishing this for the future. All right, let's go back and take a look at what's happening here. All right, we are breaking back inside. Let's measure now how much or how far are we from rejection zones. Look at this. Let me give you here a little bit of advice. Remember that when we configure our prime oscillator, right? Let's go and visit a style. We went all the way down here and we configured bullish control and bearish control lines, right? Negative 95 and positive 95, right? You can check that full episode on trading with indicators, all right? Therefore, we have a threshold area where when we see it going up, that's when we start looking for resistances on our price action up there, right? And we have Army Piper in the room. What's up, brother? Welcome to Army Piper. What is up, man? Thank you for helping around. Let me know if you if you want to jump in, maybe we can host you into the classes. Of course, that'll be amazing. By the way, when we watch or when we do Fibonacci, I would love for you to come and teach it with me. I think that will be a great master class from Piper. That'll be perfect. So by the way, guys, now that Piper is here, let me give you a little bit of something that we got going on. We have a new promotion on bluffing. So there is something going on there. If you create a new account, if you have another one, don't worry, get another one, right? A new one, take advantage of a reward for depositing in. I'm going to be bringing you up the details in a minute, but in the meantime, let's take a look at what we were talking about here. So we have the rejection zones. I usually like to have the goose heads, and if you don't know what a goose head is, it's just basically a formation that looks like a goose, right? Like a goose head, something like this with the peak horizontal, right? Before it goes back down, up, and farther down, right? So basically, this is what I'm looking into a goose head. This is not a goose head because the peak is not horizontal. This is a goose head because the peak is other color and horizontal, right? Whatever happens after the peak, I don't care, right? We already have Kavakat decided what we're going to be looking for on that after the peak, which is a farther continuation before a big dump or a big reversal, all right? So we have it here. It was a 15% bunk, not far current. Oh, you guys are talking about the movement. Great. All right. So what do we have right here? We are jamming in, or we're going into, not quite there yet, right? Into the rejection zone. Guys, remember what we talked about yesterday, right? You buy where and you sell where. Let's take a look at this setup here. This was an example just to play around with our our support resistances, right? Our zero knowledge strategy, and also setting up our our risk management, which in this case we were learning to set our stop loss based on volatility weeks. All right, remember what I told you guys. Well, when we see the price action, we plan ahead for whatever could be playing out, for whatever could be happening, right? The first thing, because we were bearish, well, we favored shorts. So what happens? Going back down, right? Maybe getting in here, going back up, and then rejecting in continuation, right? Now it's going the other way around. We knew this could happen. In fact, we discussed this not only in the morning market, but also we discussed this on chapter number 4 and chapter number 5, where we were looking here for the spring. Remember that? Go back and watch chapter 4 and 5, and you'll see that we were talking about the possible spring and the double bottom spring. All right. Nonetheless, what has happened? We are back at, look at that, our SMA combo, right? Pairing very nicely with our dynamic reactor. Now we are discussing, let's get it here. Perfect. If we are going to be having a rejection at this zone, I believe we are. Why? Because we can still go a little bit farther up within the rejection zone, right? And once we are farther up in here, that's exactly where we start looking for our resistances, right? Where are our resistances? Look at how far away we have these resistances. Nonetheless, right, it's not about your breakout, and this chunking here is acting as a resistance, which now was breakout on our W pattern. It's about the retest. So I rather have this retest for a possible entry, and off we go. There's another chance in here, right? This is a slightly slower or lower chance, but it's still within the table. What is it now? It is that we are not yet at the reversal zone. So we can still maybe do 1 or 2 candles within the reversal, right? And maybe 1 or 2 candles are going up in here. You see that? And maybe the reversal is going to go on the dynamic reactor. You see that? Maybe double breakout, a retest, and off we go. Also, be aware that this could play out just like it played out, for example, in here. Look at the retest. The retest is within 1 candle before hitting target. You see that? Let's go back and watch another 1 candle retest, because that usually plays out very, very fast. Look at that. It's not about your breakout. It's about your retest, 1 or 2 candles on the resistance, and off we go. All right, this is difficult to catch, and you might be wanting to look or visit maybe some other time frames, right? Let's first check out those time frames just to wrap it up with the analysis for today, and then we're going to be jumping into risk management. All right, because I think right now with the volatility that we have, this class is just perfect to have around. All right, so hey, we have MJ Mahmoud in the house. Welcome. If you don't know, that's my fiance. Lots of kisses, my love. Thank you for being here. Thank you for sharing that support. Don't believe that. She's just making sure that I'm not out of partying. I bet you that. No, I'm just kidding. She knows I'm here, stuck in the office. So, other than that, let's take a look at what else we have in here. All right, let's go to a lower time frame. Let me show you how am I going to be using a lower time frame to deduct a faster entry within a higher entry here. All right, so let's go and take a look at the 15 minutes. Why? How many 15 minutes chunks do I have within a one candle here, right? This is a 4 hour. 1 hour equals how many 15 minutes? 15, 15, 30. 30 and 30, right? 1 hour. So basically 4 per hour. If this is a 4 hour candle, right? How many do we have? 4, 8, right? 8, 9, 10, 11. How many more? 11, 12, 13, 14, and 15. There we go. So we have that many candles within a one single candle. And today my brain is just not braining. All right, so let's go and take a look at what's going to be happening within these last two candles and have a better understanding on what pattern we could be having in a lower time frame to then predict a breakout on a higher time frame. Remember that you can be using this, for example, lower time frame, upfronts, moves for a confirmed breakout and retest, right? For an early 4 hour breakout. All right, let's go take a look at that. So let's go to the 15 minutes in here, and there we go. We have one of the patterns that we know. It's not complete yet, but let me give you the heads up on that pattern. We talked about that on Know Your Asset, right? So in Know Its Pulse, it usually plays out on the 4 hour. Bear with me. This is going to be interesting. When we're going up on Bitcoin, we usually have going up, little hump, bigger hump. We confirm a triangle, and then we break that triangle. Sometimes we have a little pullback, but we ended up breaking to the upside. We have a smaller one in here. Look at that. Going up. Where is it? There we go. Going up, little hump, bigger hump. We have a triangle, right? We have a breakout, but finally we tend to break to the upside. Nonetheless, remember that anyway, this is a symmetrical triangle, all right? Usually symmetrical triangle at the top, yes, when we have a big pull, this is a bullish pennant, but a symmetrical triangle, when we look at this in a lower time frame, it usually is a 50-50 chance. So remember what I always tell you guys, the goal on the patterns is not on the percentage of breakout. It is on the boundaries, right, that you have for bouncing the inside, so trading the inside or trading the breakouts. You have a threshold to measure a breakout, right? So that's where the goal is. Let's go and visit one more so you can see that how this plays out, right? Once again, look at that. We have going up, right? We have the little hump, the bigger hump. We create a triangle and we break to the upside, all right? So you can see this repeats over and over. There is another one, right? It keeps repeating. There is another one in here, right? There is another one right down here. Where is it? Right down here. There it is, right? And there is another one in a bigger picture on daily. So now that we know what we're looking for and we understand what we have in front of us for the pattern, right? Let's apply the knowledge to right now conditions, right? Let's go back to the 15 minutes, right? And what do we have? We have so far, because remember, a pattern, it's only a pattern once it confirms its breakout, all right? We have going up, little hump, bigger hump, little range, and then we need to set, we already have the first low, we need to set the base for the actual triangle. You see that? So what's the other option that we can have, guys? Because we need to be one step ahead of the market. All right, we need to foresee what could happen, right, and be prepared. So let's just stick with this idea first, and let's just move into the next idea. So if this is a bullish pennant, we already have broken, right? But seems like we are retracing. Perfect. All right, that's fine. Now we see that we have the hump, secondary hump. We're looking for the bull flag, which means I could be bouncing from here to there and finally either break or retest and break. You see that? So what am I going to be hoping for or waiting for here? Let's bring up chunky candles so we can see better what we're doing here, right? Chunky candles, man. I don't know. Today, Alexo was calling him. What was he calling him? I don't quite remember. That's funny AF, man. It was like, what? Overweight candle or something like that? I don't quite remember. I just was laughing so hard. But whatever. The point is that at this point, we also need to look for consistency on our oscillator. What's happening here? We're losing the zero line, all right? We have lost the zero line before, all right? Like, for example, right there, right? And we don't go that far below. Nonetheless, at this point, we need to hold whatever is going to be our support. So far, I have a bottom, right, or a low, a higher low. So I could be guessing that this is my symmetrical triangle line, all right? So I'm either breaking and going for a lower low in here, right? Or bouncing right away and going up. Remember, the gold in here, it is on the breakouts, on the lines in there, all right? So if we break downwards far enough, so previous support becomes new resistance, well then I'm gonna go and hit my dynamic reactor. All right, remember that based on my triangle I'm acting upon. All right, I have a plan. Now what could be another scenario here? Well, let's just get rid of this. Let's just move it aside because this also can play it out along the lines. All right, we'll see. We're gonna be seeing that, and maybe I can have, who can tell me what could this be, right? And usually when we have a head and shoulders, in this case, we want the bottom to be pointing at the way of the breakout. So for example, if we have a cricket head and shoulders like this, well, we usually want it to actually, oh, I cannot change this, right? To actually be pointing the other way, like this, right? So my neckline, it's in the direction of the breakout, right? Usually head and shoulders, it is a negative breakout, all right? So what's happening here? So if I'm looking for a short, well then a cricket line to the downside might be giving me the best scenario for that breakout. Does this, let me get rid of this for a second, all right? Let's change this like that for a little bit, right? Oh, come on, like this. Does it now looks like we're cricket to the correct zone? It seems like it, right? So again, we could be bouncing from here and going back downwards. Now we have two possibilities. Guys, we have now a plan for each pattern, right? What if in this case, we do have a cricket to the upside? This cricket to the upside neckline takes away a little bit of that pattern perfection, right? Remember when we talked about the accumulation scheme on Wyckoff, right? The uglier the pattern, the less of that 70% chances of ranging that we have, all right? The same thing happens here. The cricket, or if the cricket base is not pointing at the direction of the breakout, well then the less likely we're gonna be breaking to that direction, if that makes sense, all right? So what do? Do we have a clean and clear picture so far? No. But do we have the plans and the means to trade this? Of course we do, right? So what are our plans? First, possible triangle here, right? Let's bring chunky candles. Perfect. Now also, I can be measuring a trend in these little candles, right? What else? I have my dynamic director coming in strong. Now maybe, and then just maybe, I'm losing or I'm missing to set up my set of tools. So where's my SMA combo? It is down here, just below the dynamic reactor, right? I'm losing the 0 line so far, right? But I'm still very, very bullish, all right? And my consolidation score is telling me that regardless what's going to happen here, I'm soon going to be breaking whatever pattern or ranging zone I'm making, right? So I'm running out of time. All right, let's bring up the big guns. Let's, for example, take a look at our support. Where is my support? Look at it. Here I got I support. And then I have another one. Let me just get rid of this line so we are not confused on what's on the screen. All right, perfect. So I think that my first area of support, well, no, I know that my first area of support is going to be here, right? If I see signals of bouncing, this could be my first possible entry, all right? Also, where I see my possible order block zone. Guys, usually when we see ranges, right, or hiccups on the way up or on the way down, like here, right, a hiccup like that, usually we say that we have an order block, right? Why? If the order block, it is where people are allocating their buy and sells, well then why are they allocating it there? Well, if you see this, it also creates a support and a resistance, right? And people are looking at this. So what do you think people are going to be doing here? Buying just like us, right? And if they want to buy, they need to set what? Or they need to provide what? They need to provide liquidity. They need to set their positions, right? So as you can see right there, that's where we build the order block based on different structures. So I don't actually need the order block tool to start predicting, or better yet, because we don't like the prediction word, right? We rather say that we are speculating. We can speculate that right here, there is an order block being formed or formed already, all right? Now we can take a look at our, for example, support resistance or order blocks, and guess what? Did we freaking nail it? Did we? Yes, we did. All right, so we have a high order block in here. How bullish or how bearish is it? Damn bullish. Look at that. I need to watch my language. All right. So being under not under watch, it really gets my tongue rolling. That's my friend. Sorry for that. We're gonna get demonetized. All right. Hopefully not. Hopefully not. All right. So, oh, by the way, let me shout out J Violet in the room. Key DGT. What's up, guys? Welcome to the chat. JB, what is up, brother? Welcome. The Duty Hunt. What's up? All in 72x short. Oh, you're 72x short? Good luck, bro. I don't know. Depends on what time frame you are, right? Depends on what time frame you are. Also, remember that we asked our professor here on ChatGPT, right? Let's just bring out that for a second. ChatGPT, 1 second. There it is. And then remember that we configure our professor. That professor or that configuration, you can find it again on chapter number 4 or 4.1 on the notes in the Discord, right? Remember, if you are 75%, if you are 75x, that means you need to get a 1.33% move to get liquidated. Good luck, bro. I don't know, man. With the liquidity, with the volatility that we have right now, right? Well, in the 50 minutes, it's not that much. You could make it, like, for real, right? But if you're talking about the 4 hours and being 75x, whew, man, you do have some balls of steels. Respectfully, by the way. All right. So look at that. We have a very nice robot flex. Who else we got here? Hey, Killipanth, what's up? Welcome. Welcome. Love to see you here. All right, let's see. Guys, if I'm missing somebody, please shout it out so I can see it, and I can also shout it out here in the chat. All right, so we have a high order block. We're going into it, right? And it's 99% bullish. Does that mean it's going to hold? No. that doesn't mean that it's going to hold. It means people are putting up their position there, but sometimes they regret and take it out, right? So it is a high order block, not a loud order block, right? Usually high order blocks are pretty strong, but they are not the strongest, all right? So we need to consider that sometimes, because we're losing the oscillator here, we might be able to take out full liquidity of that high order block, all right? We need to be careful. But so far, there is a point of confluence, right? Not only my dash line, which remember that dash line, it is from the megaphone, 4 hours megaphone, right? But also to what? To my order block right here. So let's say we have something else going on, all right? Let's measure. Oh, yeah. For example, here we go. We have a channel, right? How can we do? What can we do with the channel? Perfect. Let's just extend it stops something around here, right? Let's push it up in here, right? And then it's bottom. But since we are too far from bottom, let's just ignore it. So as you can see, and let me bring up my order blocks. Where are they? Come on, order blocks. There we go. We have an order block in here, right? We have the top of a channel there. What else do I have? Let's bring up the support and resistances. I have a support in here. I have another support in here, all right? I'm building on my confluence, guys, all right? You see how? Then what else do I have? Oh, look at this. I have a golden line right here, all right? So let's call that golden line. And then let's see if we have something else. EMAs, ghost trend. Yeah, let's take a look at our ghost trend. Well, guess what? We are, in fact, breaking through that trend line. So who's 75% short? You might have a big chance in here, buddy. Depending on your entry, you might have a big chance. If you took it all the way here, right, on that double top, on your bearish divergence, on your, what's this, on your peak seeker, right there, and you're already on profits, you might have a chance in here. Why? Because this, as it moves upwards, and let's just measure, you are, what, 1.33%. Let's just measure that, 1.39. So if that moves up, you nailed it if you enter here. You nailed it. Because at this point, we could be creating a lower high. Remember, the head and shoulders, right? Going to visit, then support. Then you could be making it. If not, if you're here, entering right here, right? You just need for it to go up slightly and get, oh man, I don't know. Still very close to it. It's still very close to it, all right? So it's exciting, man. I do get excited about it. All right, so we have a bunch of things here. Let me just get rid of them so we can have a cleaner chart. Of course, it's spaghetti, nutritious, but it gets in the way. All right, so where do we have our main support? Well, we have an order block. We have another line in here, another line in here, and this other line in there, all right? So basically, we're seeing that we have a bunch of stuff right here. So we could be going for a long position somewhere around here. And this is where you need to set your stop loss. Remember, now when we start talking about confluence and risk management, we already have the confluence. So where else could I be aiming for? And guys, bear in mind that your stop loss also is used to prevent you to lose, all right? Let's go, and this is the perfect example, all right? We are highly bullish, low volatility, losing the oscillator. We are kind of like in a 50-50 chances, right? Let's run our odds, all right? Let's take a look at what we learned. So first, bullish or bearish, right? Load your indicators, settle down for a working, all right? We already have it. We already know the DNA, configure your trend, all right? Mode, already done it, right? Before entering, find confluence, we already have, right? We draw our lines. Forecast and compare your analysis. Perfect. We kind of like doing this at right now, right? Have always a plan A and a plan B. This is what we're discussing. We're going to be seeing that in a minute once again, right? Then let's take a look at it. Flip at least 3 indicators. Flip of the ribbon, add support. All right, so let's do number, what was this? Oh man, what is it? Why did it change? I see you guys connected. No, anyone connected? All right, whatever. So let's take a look at, what is it? Number 12 in here, all right? Let's take a look at number 12. So what do we have? What is our next support and resistance? Well, as I can see it, There's a big bar here, small bar, not really a smart entry zone, but all the way here. So where should my stop loss be? My stop loss could be at the very next support, all right? Or twice of my volatility, right? So at this point, where can I be taking profits? At previous highs or a little bit lower. So am I having enough of a trade space? Yes, 1.49. I could be jumping in with what? With one full position. But there, I'm missing something, guys. I'm missing something. What am I missing on my stop loss? Anyone? No one? I know you guys know it. I'm missing my what? My wiggle room. Of course. Yeah, my wiggle room, that's what I'm missing. So if I add my wiggle room here, you'll see that I'm just scratching just barely over one. So does it make sense to maybe jump in here? Well, what if it happens like before? What if it goes up in here, right? And then I'm not able to jump in all the way down here, right? Well, then that's where I could start maybe applying 1/2 of my entry, all right? And then where can I maybe jump back in? Well, I do see a bullish area here with disparity. Yes, not that much, but I see, look at that overall volume. It is tiny, right? And I've bounced off that zone before right here. So this is telling me that this could be a very small smart money entry, right? So maybe I can aim for my second entry right here, all right? Second entry, or better yet, where my next support was, right? So let's go for that one. Let's go all the way down here for another half of a position, all right? And then I leave my stop loss. Where is it? All right, guys, here's where the trick or the magic tricks start happening. We're gonna come back to this example. Let me first show you one more before this one, so we can just understand this one a little bit better. All right, let's go. Let me handpick a area here. So let's go for this one here. All right, maybe we're looking for a long positioning here because we have what? We have the SMA combo, right? We have a predictive range in here, and we're just breaking dynamic reactor, right? All right, seems like we could very much be taking a long position somewhere around here. So my stop loss, where should it be? Well, this is my previous low. This is very, very low. What is my next low? Somewhere around here, right? Right there. So this is gonna be my next low, all right? Well, next low, and then do my wiggle room. There it is. This is what your stop loss should be calculated for. Remember, not only the advice, not financial advice, friendly advice for your liquidation point, so you calculate the amount of X, be twice as your stop loss, but also your stop loss as a risk management tool. It is used to what? If it goes lower, bounce back up. Hey guys, we just lost it. At this point, I'm out. So how far could I be out? I could be out right there. You see that? So instead of having a loss of, let me measure it, a 1.38%, I could be having just a loss of 37%. You see how am I mitigating the loss? And that is because I'm looking for my previous main support, right? And giving it, look at that. Let me throw that line. There it is. Here it is. There it is. All right. If I would have placed my stop loss here, or even a little bit above, you see, I would have lost 92%, right? If I give myself enough wiggle room, I can get out of the way of this movement, and on the way up, mitigate my loss at 37. All right. So basically, this is how it works. Usually, this is very hard to take. Why? Because you are in a conflict. What kind of conflict? An intellectual conflict or an emotional conflict, all right? Usually, you're going to be looking for other areas of support and resistance in the meantime, or in somewhere around where your entry is and your previous support is. Look at that. So we're trying to get out as soon as we hit one of those. All right, you can use those, or you can use your, let me see if we can find something here. There we go. Look at that, your golden line, right? Because we're going through the golden line, get out right there to not waste any more of your time, and then save yourself a headache. All right, remember also this is a breakout retest, maybe head switch in here and go off. But in a nutshell, this is why I calculate my stop loss at the next support or the previous low, and then add the wiggle room. All right, so I can survive the first fallout, right? And then when it bounce up, I can get out at the bounce. All right, therefore mitigating my loss. Let's hand pick another one before we go at the end and resolve that stop loss. All right, let me see if I can just Control C this. Perfect. Let's go in, for example, do, I don't know, this one looks okay. So for example, we're going for, let me bring out my support and resistances here. Perfect. I have money flow POC. I have this area right here. All right, so maybe I'm willing to enter somewhere long position at my previous low right here, which is going to be my stop loss and my next meaningful low in here, or at my next support. Remember, I don't know about the next candles, right? And then add my wiggle room. Remember, how do I measure my wiggle room? On the past, I want to go and measure the candlestick size, average size, right? And add it once below my support. So let's do that just really quick. This is a candle size, a stick size, same one here, right? Maybe I can just reduce it a little bit. There we go. Maybe compared to this one, that's pretty cool. Maybe on this bigger one, just have the way somewhere around there, right? So I added right below my support, and look at that. Did I made it? I think I did. Yeah, because it took me out there, right? You see how adding that, usually we can be very tight to our stop loss. Feel free to add just a tiny bit more if you need to, or if you feel like. All right, so what we do here, we enter, it goes against us. All right, it bounces up, and as soon as I'm in profit, what do I do, guys? What do I do? Do I let it run to Valhalla? Of course not, right? At least I take 50% out of my trade, because I know it went the other way around, right? It's going farther than what was supposed to be a bouncing zone, right? I mean, if it goes up and then bounces back, I enter right here, not right here, right? And then I ride for these profits. Does that make sense? But so far, since it has pushed through my support in here, all right, then I want to mitigate at least 50% out of my entry. What I really do is I do move my stop to entry as soon as I'm in profits, and try to get as much as I can out right there. There's a joke between Alex of Crypto and I, which was I buy the tops and I make a profit on it, right? Why? Because Alex of Crypto, just so you know, he's a 3-minute, 1-minute trader, right? And I'm a 4-hour trader, right? So imagine how many trades he takes, and he's like, I'm long. And I'm just doing analysis for a short, man, right? And he's, yeah, I'm long. And I start having the FOMO stuff, right? And then what happens? Well, then I enter somewhere maybe on this retracement, right? So in this retracement, right, breakout retest, and then ignore this. And then what happens on the bounce up? On the bounce up, I take out my gains, close my trade, and then let it run, right? So basically I do this. Let me show it to you really quickly. So let's go for a long position, buying the top. Where's my stop loss? My stop loss should be at the next resistance or meaningful low, right? Aiming to my next high, right? What happens? I start losing it. I lose it, right? Or I start losing it right here. It goes low, right? What happens? It goes back up. First candle in the green, right? Early profits, move it to my entry. What happens in here? stop me out at profits, and I bought the top and make like a $3 gain, right? So I buy the top and I make a profit out of it, right? So this is the joke. But the point is that my stop loss, it's allowing me to have that slack, right? For the whatever thing happens to slack back up or to whip back up into profits, right? Close the candle up above in profits, or whenever I see that has already pushed through very strongly, right? Get back into profits or in close my entry right there. All right. So basically, that's how I'm using my stop loss as a tool to prevent losses. So risk management. All right, let's come back to this area, right? This is just a little bit more complex. Not too complex. Do not be afraid of this, right? The only difference in here is that we're losing the oscillator, right? We're losing the oscillator. So that's a bearish area, right? We already have decided that we're going to be risking one full position in 2 entries. As you can see, my risk is still equal to any other entry. I'm using whatever with one single entry. What is my entry? For me, it's at 3%. All right. So what is going to be for you? Again, we visited that option yesterday. You can do something like from 1 to 10, but I don't advise 10. I usually advise from 1 to 5. Not financial advice, just friendly advice. All right. I use just 3% of my full wallet equals one full position. All right. Then I can do whatever I want with this one full position, right? As long as I'm not adding 1 and 1 and 1 and 1, right? Do you know what I mean? Like, for example, instead of, all right, I'm going to cheat myself, right? And I'm going to be telling me, oh, well, now that it's failing the support, well, I always wanted to put another entry right there. No. Don't do that, guys. Don't do that, all right? So you need to plan ahead, right? And remember, do whatever you want. 10 entries of $1, do it, right? Maybe 25%, 25%, and 50% of one single entry, go for it, right? Who's against that? Nobody. The point is that you don't risk more of one entry. Don't risk more of 3% on one movement, right? On one analysis. So just make sure you're doing that, all right? Or not doing that if that is the case, that you're re-adding full positions over and over, all right? So from the beginning, because of the risk that this involves, and remember, this is a example based on a real case scenario, all right? We are gonna be trying to jump in here with half of a position, and if it goes lower, another half of a position equals one position. Oops, where is it? It's no longer there, but one position, all right? So we're doing whatever we want with one position. Now, my stop loss, it is all the way down here. I'm still respecting the at least 1-to-1 ratio, at least. Usually trying to aim for a 1-to-2 ratio, right? It's not like, all right, OC told me to 1-to-3, so let's just scratch that, let's just pull that up till I have 1-to-3. No. Like, for example, be realistic. Like, where is your target? Where is your predictive range, right? Your predictive range here, does that give you 1-to-3? Very close, right? Very close. So is this the aim that I want to get? Maybe, but here's the trick. Remember that we are splitting our entry here. So what happens if I hit this entry? I jump in. And then what happens if I hit the secondary entry? I will what? I will be averaging down my entry from here to there. My position entry is gonna be here. Does that give me 1-to-3? It gives me 1-to-4. You see that? You see how am I leveraging my single position, right? Dividing it in half, using my same risk level. I'm not pulling this downwards. I'm not. That's not what I want to do, right? Oh, by the way, Mark Dodge in the house. What's up, brother? Man, I'm always missing out your comments. Really love it, brother. Thank you very much. Yesterday, I had a blast afterwards reading your comments. Sexy Spaghetti, I love it, brother. I really appreciate you. Thank you so much for being around. Really, you rock, brother. Hey, Amy, Hey, Amy Leaves Crypto, what is up? Welcome. By the way, I just clicked liked on your video. That was an amazing, amazing, amazing video. You know what? It in fact deserved a shout out here. Let me bring it up. Guys, do not miss that episode. It is fantastic. It is fantastic. So go ahead, take your time, go visit Amy Leaves Crypto and click that like button, please. All right. Let's move on into what else or how am I going to be doing right here. All right. So I'm using my stop loss in case, remember, to prevent in case it goes deep in here, it goes back up. And if it does that, guess what? Move my stop to entry. Take early profit now, right there. Early profit, 50% out. And let it do whatever. If this is a dead cat bounce, let it be. You're already earning profits, right? You successfully buy the top and made a profit on it, right? Thanks to a good management of your risk. At the end of it all, you have one position that you can do whatever you want with, right? Remember, divide it as much as you want, right? Just don't divide it that much that you lose the sense of a position. So for example, let me give you an example of that. All right, I have one position and I'm gonna buy here, here, and there. Well, really? I mean, it's not a bad idea, but this would be DCA with leverage, right? Is it really trading? I cannot answer that, right? I mean, this would be, if you choose to that would be respectable. But still, I think that there's much more to be taken here. Like, for example, every pullback, it's a good area for retracement, right? Every pullback, it's a good area for retracement. Every pullback is it's a nice area for retracement. Until what? Until we lose the trend line, right? Go back down here, your entry, and off we go, right? So I could be maybe holding for 3 possible entries, right? And then, yeah, maybe try to ride it all the way up. But then what is going to be your stop loss, right? What's going to be your leverage, right? Are you going to be making the most out of your leverage? Yes or no, right? There's another thing that we can do. Let me explain first. Let's go to another one because we're going to have a lot of drawings. Let me explain first that you can use between your, in your wallet, you can use cross or isolated, all right? Let me just draw that so we can learn about it. So isolated, oh, come on. ISO for isolated, all right? I'm gonna be explaining on this one. And cross. All right, I'm gonna be doing this like that. All right, so what does isolated mean? It means like in my wallet, I have, I don't know, $100, all right? What is the 3% of $100? Archbeat, what's up? Hey, what's up, brother? Welcome. You have a different name here, but I do recognize that beautiful, that weird and beautiful blue setup picture. Love it, brother. Daga DT, welcome, my friend. Welcome to the class. Really appreciate you being here. Thank you for your support. Really love it, man. Let's see, who else we have here? The Dusty Hunt. What's up, bro? JB, of course, and Los on Crypto. What's up, brother? Welcome. All right, so that means that my entry is $3, all right? So that means that my stop loss on my position, let's just go for, let's do a little bit more realistic. There we go, whatever. Let's just go for this area right here. Do we have a better one? Oh, look at that. Now it's a soft order block. You see that? Remember what I told you guys? Remember what I told you guys? That doesn't mean, the hard order block doesn't mean that it's going to remain there. Now that we refresh the indicators, we have a soft order block, which means we have been eating away, we have been eating out the order block. So now our entry makes much more sense, you see? All right, whatever. I'm getting too excited in here. So let's just go for, just as an example, let's just go for a long position somewhere here, all right? Then previous meaningful high, lows, a little bit of that wiggle room, that's it. This means that these $3 are gonna be set up right here, all right? This also means that if I use, and let's remember, if I use let's go for a 75x 1.33, all right? That means if I do for a 75x and I don't use a stop loss, all right, or I forget about the stop loss of, or whatever the heck happens, I can lose, what was it, 1.3? There we go, somewhere around there, right? 1.33, yep. I can get all the way here. The price action can go all the way here, and then I'm gonna be losing $3. Gone. Bye-bye. Ciao. Finito. All right? What happens? This is on isolated. All right? What happens with cross? With cross, you get a little bit less fees, but also because you're using your full wallet to sustain your position, you also get a better return on your X leverage. All right? What happens in here? I can go, how many threes? I have a 100. All right, let's do that very quickly. We divide that, 100 divided by 3, right? And you get 33.33333. So 33, right? That means that at this point on cross, all right, if I'm gonna be risking $3 right here, right? I'm gonna be at 0 on my position, but I'll see instead of negative 100%, if this goes lower, hey, what's going on? I'm gonna be seeing 110 negative, right? And what the hell if I only risk 3%? No, but you're crossing it. You're now using your $100 to sustain this entry. For me, this is kind of like stupid, but guys, do not get me wrong. More advanced traders will say, yeah, it is not, right? But that has to do in the way that you trade. But for me, putting in 3, knowing where I want to lose it, right? And then the damn thing keeps getting it from my full wallet. That for me is stupid, right? Again, if you know what you're doing, you can use it on your favor. Because if I want a more distance here, I can add another $3 in here, another full position right here at my liquidation point, right? Maybe I can add another 3, and what's going to happen? It's going to be giving me half of a percentage more, right? It's going to be giving me, well, in fact, it's going to be giving me them first here, and then when I go back lower, it's going to be giving me just half of that percentage, right? But I can add 3, 3, 3, 3, 3, 3, 3, 3, 3, 3 until I am out of that 100. But I can decide it myself. Not only that, you have the added benefit of how we've been using it. If I add another $3, my stop loss, what's going to happen with my entry? It's going to average down lower, right? And then my stop loss is going to be here. My liquidation point is going to be there. But I successfully lowered my entry point. What if I add another 3%? I'm going to average down to half of that. And now my liquidation price is going to be there, right? And maybe I can decide, which guys, don't do this, all right? Maybe I can decide one last time. Let's just do it, right? And then add another 3%, which is going to be looking like, come on, damn thing, it just gets in the way. Half of it, right? Another 3%. And I'm going to get my liquidation point right here. Maybe at that point, look at my oscillator. Look at, my dynamic reactor. Maybe I can bounce in here, go up, close my position, and goodbye, I lost nothing. All right? It was stressful AF, but I lost nothing. You see that? This is not something that I recommend because the amount of stress, unplanned allocation of assets, uncontrollable, you get into an uncontrollable spiral to the downside where you're just going to keep adding, right? And then missing it for a little cent, and then came kind of like, hey man, I'm already 6%, 12% in, 10%, right? Guys, being 10% of your wallet, of your whole wallet, that is not an easy task. If you are 10% of your wallet, the inside of you wants to recuperate that, right? And it's going to be pushing more into it. It's just what happens with gambling. We're not here to gamble. But if you decide to do it under the risk, because maybe you just needed that extra 3% and you have a S ton, right? An S ton of Confluence down here, right? That the percentage of bouncing is just insane. All right, maybe I'm willing to add one more 3% in here, right? And then get out at 0 loss. All right? So that's why for me, just using cross is stupid, because my entry point stays the freaking same, right? My entry point stays the freaking same, but as the freaking price goes lower, my negative goes freaking lower, and I'm doing nothing here. What if I get here and bounce all the way here, right there, and then keeps going down because I'm in a downtrend? Well, shit, right? I'm F up because I'm so freaking far into a negative, right? That no matter what kind of bounce I have in here, I'm not getting out of it. Does that make sense? Please let me know. All right, I just want you guys to understand that. All right. Again, over adding, even if you're isolating, adding more than one entry, which in this case is at 3%, it is not advisable. Adding more than 2 full entries, it's crazy. Adding more than 3 entries, it is unresponsible. All right. So you can get crazy sometimes, but do not get unresponsible. All right, guys. Sorry about this. Did not meant to kind of like I don't know, yell at you. Hopefully I did not, right? But I've been there, guys, and I want to spare you out from the actual fear of losing it all. And guess what? I have blown out 2 accounts, right, in the past. It's not fun at all right, at all. So, BT Crypto, what's up? Much love, fam. Welcome, much love, bro. Retro Mike, what's up, bro? Welcome. All right, let's see. What else are we having here? So, what with cross? In cross, remember, I have 33.3. Oh, this one is, or 1.33, right? Percentage lower. And out of my calculations, and you cannot see it, I have up to 33 chances, right, to then get liquidated. What does it get liquidated? It gets liquidated my 100, not my 3. My 100 it's gone, right? Whether in cross, just 3, it's gone. And then I have, how much? Right? Whatever is left. It's not that big, all right? So let's then analyze how you could be using crossing here. You need to watch your percentage here, all right? This is gonna be key because you can get into a point where you have 0 liquidation even in cross, all right? Here is the trick, guys. I don't advise this unless you're an advanced or an expert trader, all right? So I know I can have 33 chances of this. So let's clone it. And by the way, remember, as we go lower, this increases, so my chance also decreases slightly, all right? But whatever, just for this purpose, let's clone it, right? 1, 2, 3. So let's do clone 1, 2, 3, 4. Let's do it one more time. Clone it 1, 2, 3, 4, 5. This is 5, all right? Then let's clone this. Ctrl V. This is 10, all right? Now it gets real. For example, if this is 10, let's clone this. 10, 20. Oh, come on. clone it, 30, right? And then 3 more, right? So the price needs to go all the way to 48. You see that? To then get liquidated out of this position. If you use something like 20x, right? How many times do you get your stop loss? If this stop loss gets somewhere around 0 or negative on your cross, you basically can do 20x, 25, 30, 40, 50, whatever, depending both on your leverage, right? On your leverage and the amount of your initial position based on your wallet. Does that make sense? So you can use cross with 100x, all right, with 100x leverage. And if your position is small enough or your wallet is big enough, you will have no liquidation price. Does that make sense? So you can basically leave it there for almost indefinitely. But remember, many brokers charge you per day, per hour, or pay you depending on the market conditions, right? So if you get charged, you're gonna get charged out of this, and this is gonna be reducing. Therefore, your nearly zero might be reducing more, right? And then the more that they charge you, the more that the time goes by, maybe you start generating a liquidation price. All right. So you can use cross at a small enough percentage out of your full wallet inside your trading account, your leverage trading account, right? To get no liquidation price. How would that help you? All right. Let's just say that I want to buy at 100x right now. All right. And I'm going to go, just for the sake of not making the math right now, let's go for whatever at this point. Like, this is going to be one of the trust me bro thing. All right. So bear with me. So let's just imagine that I have, I don't know, $1,000, all right, in my trading account, on my ready to be used, all right, right here on my BTC versus Tether, all right, and I'm using a one position of, I don't know, 20 bucks, 20 USD, all right, at 100x, right, on cross, because this is small enough for my account. Or let's just go for a safer number here. Let's do, I don't know, 10 bucks out of 1,000, right, on cross. Because this is small enough for my account, at this point I have no liquidation price. All right, so I can go like this, long it, and then have no liquidation price. Basically, my entry price, risk, portfolio stop loss will be at 0, right? Let's just put it at 10, whatever, right? There we go. So it's gonna be all the way very close to 0 at 10, all right? So now that I have this, maybe I can just wait to get money out of somewhere else, right? Maybe the damn thing goes lower, hits this, bounce back up, and once I'm hitting this target, remember, I'm at 100x. How much money did I did? I did what? 3 times 100, 300% of 10 bucks. What is it? You see? You see why this becomes attractive? The mistake would be, all right, you know what? I'm going to be adding out of my 1,000, I'm going to be adding one more position here. Oh, now you're leaching out of the balance here. So then maybe you do get a big chunk like this. Boom. Now you get into the worry territory, right? So basically, if you want to do this, what I advise is that you get your money out of your trading portfolio and into your spot portfolio, right? When you want to add another position here, you add enough to keep your 1,000 plus whatever you want to add back, maybe another $10. That will put down your entry point without affecting your liquidation price. All right. That way you don't need a stop loss, but you're going to be trapped on this trade until it gets right here. What if, let me give you food for thought. What if you were on Kava daily 100x here? I don't know about you, but I really doubt that you ever get out of that trade. Right? So just food for thought there, guys. I mean, this is how we're going to be concluding risk management. There are other ways to do your risk management. Remember, a couple of things that we learned today. And let's go to solo cam. Right? Couple of things that we learned today. It is split your single entry in however you want, right? There's no restrictions there. Just make smart moves based on your support and resistances, all right? Then check out, of course, your leverage setup just to be at least twice of your liquidation price, right? So basically your liquidation price needs to be 2 times, and this is it, 2 times of your stop loss, right? Remember to set first your stop loss at your support zone, right? And then at your wiggle room, and then decide what your leverage is going to be, all right? Be prepared. Wait for the price action to come to you so you already know exactly where you're going to be entering, how much you're going to be risking, what's going to be your max leverage, and where's going to be your stop loss, all right? Based on those in those things, guys, please do some safe trading. Hopefully you have guys had opened up your or expanded your knowledge for risk management. There are other ways to do your risk management, but so far these ones are the most popular ones, and I think the ones that we're going to be sticking around for the morning market report and also the calls that we're going to be giving here. Feel free to experiment, but all do it on paper trading. Do not risk your assets, because there's no point to just trade with stop losses if you just keep losing money, right? The point is that when you risk money in the market, you want to have a real sense of production, right? Or a real perspective on making that money up, right? So a real chance. That's what the word I was missing, right? Other than that, guys, thank you so much for joining. And as always, see you guys tomorrow. Ya ahora sí, perdón.